So right, now let's get into the juicy bit. So you went from not even 3 years ago buying a 25 grand property. I understand it's about 11 million at the moment, 200-ish units. Is that about right? You just want to tell us about, well, first of all, how it's spiraled from that to this, and what the portfolio looks like at the moment. That'd be great.
Yeah, I mean, like, yeah, I think about 18 months after we'd done our first deal, I can't remember now, right? No, it was only about a year, in fact. Was that last year? Can't remember. But we grew to like 40 units. And that was about a year ago. We had like 40 units, and that was just like kind of buying single units, deal by deal, refinancing deal by deal, blah, blah, blah. And we got to 40 units. And then we done our first portfolio deal, which was 82 units all in the one go. So we went from like 40 to 120, like just with this one deal, you know. And then since then, we've bought other like multi-unit blocks, like mini portfolios, and we've got another 50 odd units in legals just now. So, you know, we kind of realized, like, when we were growing initially, we used to have this goal of like 100 units, you know, and it was this deal by deal, deal by deal, deal by deal. And we got to 40 or probably less than that. I probably got to about 30 and thought, you know, this is fine, but we're not going to get, and we'll get to 100, you know, it's just a question of time, you know, but that's not really big enough then, is it? Because like, this is going to take care of itself. Like, we need to push ourselves. So we changed the goal to 300. And then it was like, oh shit, how are we going to get to 300? And it totally transformed the way we thought, because we realized that we had to go after portfolios, and we'd never even looked at that before. We didn't have a clue. The first portfolio deal was this 82 units in Lanarkshire, you know, which is awesome. You know, cash flows, well, gross rental income on that portfolio alone is 35 grand a month. So like that deal changed us as well, because then we had credibility, as Alex says. We could start the training company. You know, we had a problem because we had too much refurbishment work on the go, so that brought the building company. And you know, it just made us have a story. And since then, you know, we've just continued to grow, like just buying more and more portfolios, because now we know how to do it. We're just repeating that process, right? So the resi side now really takes care of itself. We have very little to do with that. We just got all our rents paid in yesterday, because we just get like lump sums paid in now at the start of each month. You know, previously when we started, it was like, you know, first deal that Alex was talking about earlier, you know, it was like, you get your 500 quid a month or whatever, and then, you know, your other property, they didn't pay for a week later, so you got this next wee value dropping into the bank account. Now at the start of the month, we've just got tens of thousands of pounds just lumped into the bank account. You know, we've had nothing to do. Our letting agent takes care of all of it, you know. So it's a very different place now to what it was when we started. But ultimately it started with the thought. We had the vision for the higher number. It changed the way we acted, and that's what pushed us to buy the portfolios.
Can I just jump in there? Because I think people listening and watching on that, I think there's a gem there, because a lot of people I speak to anyway, you probably know these people. The main, or a lot of the time, people getting into property, their initial goal is, you probably heard it, 10 properties. For some reason, everyone wants 10 done at the start, or to replace their income, isn't it? And that's a very common thing. But you guys talking about hundreds and 300s. Have you always been ambitious? Like, where did it come up with? Are you like competitive, as in you want to just really do something big? But where is that? Because that's not a normal way to think, right? It's admirable.
I think I'm the abnormal one. You know, I'm the abnormal one. Eck is the normal one.
Yeah.
But
so where's that came from?
Well, REWD Group is, you know, when we started REWD Group, it was all about generational wealth, right? And like, it's great having 10 units, 20 units, 50 units, 100 units, but is that really going to like provide wealth to your family and families for generations? No, you know, you need to have like significantly more. So, you know, now we did have this goal of 300. Now we've got 200. It's the same scenario when we had 30, 40, and we had to change the way we think. Now we're going after 1,000 units in the next 3 years. You know, that's the goal now. That's the new goal. Why not, man? Why not? We just need to repeat the process. But one big thing we have changed is, you know, with Connor coming in as head of business development, we're making moves to start buying down in England as well. You know, so far everything we've bought's in Scotland. we realised that, you know, folk talk about this gold mine area, and it's like, you know, see if we were to focus on a gold mine area of a population of like 10,000 properties, you'd be doing very, very well to buy more than like, I don't know, 20. You certainly wouldn't own like 200. So we've changed our geographical area to now include northeast, northwest, and like Humber. What's it called? Like Humber, like kind of Yorkshire area, like Hull and Grimsby and all that type of. So we're now looking at other opportunities there because we realise we need to buy other portfolios in these different areas. And again, our letting agent will take care of all of that. So we just need to find the deals, tie the cash to the deal, and away we go. You know.
Can I ask a couple of specific questions on that, please? So around the portfolio. So how are you? I completely get it. I love the thought process of thinking big, and then you realise, well, we can't be going after single units. You know, if you've done 200 lots of legals, I think it's pretty much impossible. 200 mortgages, I think it's impossible. But buying a portfolio, first of all, do you just do one charge on a portfolio? Is that what you do? One finance over the 80, for example, or is it? I'm assuming it's not multiple mortgages, right?
Yeah, I mean, when you get to that level, you're on a portfolio lending.
Portfolio charge,
and actually, you know, that Laurie and I talk about the concept of phase 1 and phase 2 of property investing. So phase 1 is when you're sort of buying those individual deals, when you're sort of at the lower numbers and you're having to deal with the individual mortgage lenders. You know, if you're investing through a limited company, you've got the likes of Precise, TMW, Kensington, you know, the Paragon, those guys, and they've all got the various different criterias, and some of them don't like ex local authority, some of them don't like more than 4 in a block, some of them, you know, minimum value 60k, etc., etc. It's a nightmare starting out because you're constantly having to shift and deal with all these different lenders depending on the specific property, and you get lost in admin of dealing with refinances, dealing with mortgage brokers, most of which don't really understand the complexities of buy and let, and it's not worth their while learning it either. You know, it's more hassle than it's worth. So, you know, that was really tough. But as you transition into phase 2, you start buying portfolios. You have no other choice but to transition away from those lenders because they don't understand it. You need to get into commercial lending, portfolio lending, and it becomes much more of a relationship with the bank. You know, we have 2 banks that we work very closely with. One who kind of funds our standard lending. So when we're refinancing onto a term loan, we've got this bank, and we've got about £7 million worth of loans with them now. And it's very much a relationship. We can go to them and say, okay, here. They're not going to say, okay, we're not touching that portfolio because there's one property that we don't like the look of. You know, they take a much broader view on it. So the idea of sort of computer says no is gone, and you're working with relationships. And don't get me wrong, there's still restrictions there in terms of LTV and in terms of how they look at the portfolio, whether they're going to downgrade it because of concentricity or whatever, you know. So, but it's much easier to manage your finance at that point. You know, we're not dealing with various different lenders and all that sort of stuff. Yeah. We will take a bond and floating charge over the company in addition to first charge security, which means kind of restricts you if you're trying to buy still single units with private investor cash. Private investors can't really get security in your company because it's bond and floating charge. So we have what we call like a feeder company if we want to still do those types of deals on the side. Anyway, that's kind of
structure of the finance. That's cool.